Good morning, everyone, and welcome to the morning market review. Today is Tuesday, it's the 12th of December. My name is Russell Shaw, I'm a Senior Market Specialist at FXCM, and my email address, just want to highlight it as rshaw@fxcm.com. And if you want to correspond, that's the email address to use. Just going to go ahead and bring up our disclaimers. I'll bring up our risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Welcome, as always. Thank you for joining. I'm going to bring up the commentaries disclaimer. Hi, Raj. Good morning to you and welcome. Good morning, James. Thank you very much for signing in. All right, let's take a look at our references, MarketScope 2.0 and TradingView. And let's go ahead through to TradingView. Let's take a look at the real rate. Let me just refresh it. I wonder where it went. Yeah. Okay, so this is the real rate. And I beg pardon, let's just this. I'll just refresh this again. Apologies for that. All right, let's just go ahead and bring up the US dollar while we're waiting for the real rate to download. Okay, so again, let's do a top down of the US dollar. Yeah, we can see we are below that 30-week exponential moving average. Yesterday, we said that 30-week exponential moving average is acting as a resistance. And we want to just keep an eye on that, right? Go down to the daily chart. It's complex because we are in zone 2. Zone 2 is generally what we call the neutral area. The longer we stay in the neutral area, obviously the more congestion there is, the more laterally or sideways we said, well, let's just see if the RSI is going to pop above 50, or is it going to dip to this green trend line? Those were the two markers that we and it looks like it's heading towards that green trend line. So that would be interesting. If we break below that green trend line, then I would expect a movement towards zone 3. So the fact that we're sitting in neutral, uncomfortable at the moment, but we're trying to just get some sort of directional sense here, and hopefully trend line serves that purpose. I want to just remind everyone that we're going to have the inflation numbers out. CPI at 3:30 p.m. ZA, which would be 1:30 UK. Okay, so just bear in mind that there is going to be, I think, a highly anticipated release today. Now, we've got this red candlestick coming through on the US dollar, and I think to make sense of that, we do need to refer to the real rate. So hopefully it's come up now. Let's just take a look. Yeah, that's better. Okay, and what we've got here, this is interesting when we take into account what was said yesterday. Yesterday, the question is, well, what is the reference candle? Okay, what's the reference candle? So we said, well, there's a potential reference candle here. Okay, and if this reference candle sort of became more concrete, cemented, then potentially some sort of movement up in the real rate. But we're getting a contra. Okay, we're getting a contra. It's going to be interesting to see how today ends. Okay, we close below yesterday's low because we've got the contra, and then we would have the reference candle pointing downwards. And the inflation number here, I think, is going to have a large part to play. We've got the Fed meetings tomorrow, the Fed statement tomorrow, the FOMC press conference tomorrow. That's also going to be very influential. But I think when we see the inflation number, I think it's going to come in softer. There is moderation, especially the headline number should come in softer because oil and energy prices coming down. I think the core will be a little stickier. But last time it was released, the market really reacted to the headline number. And the fact that we're getting a potential reference candle down here may be the fact that the market is anticipating lower inflation. Okay, so we just got to see if that is the case. Of course, we'll only know when that is released. But let's just go ahead and bring in the US dollar underneath this. Okay, so click on the plus, US dollar. Let's just put in the new pane underneath. And what we'll do is we'll measure as follows. Okay, and I think the big news items tomorrow. Okay, what's going to happen with the Fed? So we can take a look at this to see if we close below this line in the sand. And what we can do is we can follow the dollar and see if we close below this line in the sand. And if we do, then hopefully that trend that was evident in the US dollar previously is starting to reassert. Let's take a look what I'm referring to. So I'm talking about this trend. It was a very ordered descent in terms of a lower peak followed by a lower trough, followed by a lower peak, followed by a lower trough. And if we can just get the moderation in the inflation, then potentially we get the breakdown in the RSI. So the RSI then dips to the downside, and then perhaps we get some sort of movement into zone 3, and then we get not quite as ordered, but perhaps something sort of like that. Again, these are question marks. We're going to have to see how the data releases. With the US dollar in zone 2, let's just take a look at a few of the other instruments. We'll go through to euro. The ECB is meeting on Thursday. I think that's going to be a very interesting meeting. The market is expecting that the ECB is the first of the central banks to actually start cutting rates. It's not going to happen on Thursday, but some sort of communication there will be interesting. Euro is showing relative weakness compared to the US dollar. That's interesting. Again, I think that it makes trading the euro more difficult than we've seen in the recent past. And we've tried to match a weak currency with a currency showing strength, and perhaps looking at the spreads between the bonds between the two regions. It looks now that euro is weak on week. So we just have to be cognizant of the fact that euro has fallen into zone 3. I'll keep an eye on it. It's probably one that we'll keep on the watch list, but in terms of trading, it's becoming less attractive. Let's take a look at cable. and see how cable is doing. All right, just give a moment for the cable chart to come up. Seems to be hanging for a moment. Oh, it's really taking its time. Let's there we go. All right, that's better. All right, in terms of cable, it is above that 30-week exponential moving average. And that moving average is pointing up, but it's flattening. So there is a loss of momentum on the cable pairing. So again, it looks as if the Forex pairs here are becoming less friendly than they were, just say 2 weeks back, right? Go through to the daily chart. It's not quite as bad as the euro. In fact, this is more aligned with the US dollar than the euro is. And you can see it's trading also in zone 2. Again, BOE might start lowering rates ahead of the Fed. That's going to be interesting to see if the European economies start cutting rates first. ECB, though, seems to be the weakest, okay? Just want to keep an eye on the dollar today. If the dollar dips below into zone 3, is cable going to move into zone 1? What we can do here again, just to help us with the measure, is let's put in a trend line on the RSI. Now, just like we were watching the trend line on the dollar and the RSI's position relative to 50, we can do the same thing here. If it crosses above the trend line, then I would suspect we're heading back towards zone 1. Okay, if it dips below 50, well, then we're getting the weakness, and we'll see a zone 3 movement. So the idea here is we're caught in no man's land, and it's not a pleasant place to be as traders. It's much easier to trade zone 1, zone 3s, because those are trending movements. We're in the neutral area here. What we're going to do is we'll just take a look at Aussie and Loonie as well. We don't, and I think actually we bring up the yen here, because the yen's also now going into a potentially live meeting. So let's just do some analysis there as well. So let's go through to the Aussie first, and we'll do a top-down analysis just to see if we can get a bead on the direction there. Aussie and Loonie are commodity currencies, so slightly different fundamentals driving those than, say, the euro and pound pairings. Okay, so let's just take a look at the Aussie. All right, so we are above the 30-week exponential moving average, a 30-week moving average pointing up. Okay, RSI is above 50. Go through to the daily. Is it giving us anything? It's still slightly uncomfortable here. Okay, so what we'll do is we will use an arrow just to suggest that we are in zone 2. Again, it's easy for us to be in zone 1 because there's a directional bias, right? So we're in zone 2, so consolidation at the moment. Let's throw in our trend line right here, and we can measure, do we cross the trend line or do we dip below 50? Both going to have very different ramifications. Next one we're going to look at the Loonie pairing, US dollar Canadian. Okay, let's go there, take a look. Okay, again, a top-down analysis here. And let's take these peaks and troughs out. I want to see this relative to the 30-week exponential moving average. It's on the 30-week exponential moving average. So more of a neutral feel here on a longer term basis. Even if you take a look at the RSI, it's really on 50. There is slight negativity with it being below 50, but it's really on 50. Again, if the US dollar does dip, so if we get the moderation in inflation, and if the US dollar does dip, well, what's interesting is the daily chart here of the loonie. There does seem to be perhaps more of an opportunity here, and it's also a complex chart because the Canadian dollar would be aligned with oil, especially, and oil showing some weakness. So, but in terms of the zones, it does seem to be the forex pair that is showing the most direction that we have looked at so far. So I think we've got to put it onto our watch list. Now, what's interesting here, if we go through to this chart, no, this chart. Okay, it's a daily chart. I just wanted to get rid of the zones. It does look as if there's been some sort of breakdown here. Head and shoulders is typically a reversal pattern. What we'll see is here is the trend moving up, and now it looks as if we may be reversing to the downside. Left shoulder, head, right shoulder, and then here is the breakdown. Okay, here is the breakdown. So again, let's just keep an eye on the US dollar, and then I think US dollar loonie needs to go onto the watch list here. It's the pairing that's showing the most directional bias. Okay. A few other charts that I want to take a look at. So first will be Japanese yen, and then I think we've got to look at gold again, which was brought up yesterday, and Andrew just wanted to take a look at it because it had crossed below 2000. Just before we get to gold, let's just go through to US dollar, Japanese yen, and let's just do analysis there. Now, what's happening with the US dollar, Japanese yen is the Bank of Japan is looking to pivot and become more hawkish. There is speculation it can be as soon as the 19th of December. I'm not sure that is going to fly, but 2024, certainly I think the Bank of Japan is going to become more hawkish, and we potentially see some rate hikes there. All right, Raj, cheers. But what you can see is now that it is starting to test that 30-week exponential moving average. I want to see if it crosses below. We do have the RSI dipping below 50, but really the US dollar Japanese yen has to dip below that 30-week moving average, and that 30-week exponential moving average has to turn down. Let's just go through to the daily chart, and here it's a nice trend. Okay, this is 1, 2, 2, 3. See that? 1, 2. So it's a little bit more order. 2, 3. 1, 2, 2, 3. There's a big movement down, and now we're back into zone 3. We can take a look to see where the momentum bias is, definitely to the downside. Okay, so you can see it's moving to the downside, and I think that what we can do is we can go through to the hourly chart here and just see that it has US dollar Japanese yen also looking quite promising. And of course, what we can do is just keep an eye on that inflation release this afternoon and see how the US dollar moves. Okay, so if there's moderation, I'd expect some US dollar movement to the downside. All right. James just saying UK unemployment rate unchanged. Okay. Let's do gold. Let's go into gold now. All right, so what's happening is the US dollar is starting to potentially move. The US dollar and gold are very closely correlated, but inversely correlated. So if the US dollar starts moving down, so we just want to watch that, okay, then we may see some sort of movement up in gold. Let's just go through to the daily chart here. It's really just moving into zone 3. I am actually gold bullish at the moment. The reason is because we've got a higher trough followed by a higher peak, and I just wonder if this is the higher trough that's coming in here. Unfortunately, the momentum has dissipated somewhat. The black exponential moving average flattening out somewhat, and then you can just see the loss of momentum when we do this. Okay, it breaks through this trend line here. Nevertheless, okay, I would expect that there is still some sort of inverse correlation between gold and the US dollar. So it's a dual analysis. Keep an eye on the US dollar. If that's moving, then go and take a look to see if gold's moving. Okay, so let's just go through to the hourly chart here. And what would be interesting, see, as long as what we said with gold is as long as it stays in the lower quintile, there's going to be pressure to the downside. That proved correct. Okay, that proved correct. But we've broken out of it lower quintile. We're actually moving to the upper quintile, and we're getting a movement here. What I would be watching for again is the inflation release. Once we get the inflation release, I'll be looking at the US dollar movement. Then I'd reference the other majors or gold. All right, and just to end off, let's go through to the DAX. Not the most comfortable chart for me. I explained why yesterday. And the reason for that is because it's still got this overbought condition. I really am getting quite concerned about it. I'd be much happier if we sort of normalize. The longer that we stay overbought, the worse it's going to be when the correction does happen. The weekly chart actually looks pretty good. It looks really good. It's taken out the resistance area, but I think that this resistance area is still going to have an influence. And the reason I think it's going to have an influence is simply because of this overbought RSI. So far, market's not cooperating with the analysis here, so it's been really a good return on DAX. But I want to just reiterate, the whole reason we put RSI here was to put the risk reward profile in, and we're in a high risk environment at the moment. All right, so that's where we'll go up to for this morning. If there's any questions, just go ahead and type those in. Any questions? All right, nothing coming in. So we'll conclude at this point. Thank you very much for signing in and joining this morning. Have a great day, a great evening ahead. Tomorrow, we'll do the Crypto Minute as well. Thanks very much, guys. Cheers.